Keith, what do you think the market has already priced in for tech, especially as we've climbed back to all-time highs? What do you think about the implied volatility discounts in the NASDAQ?
Yeah, it's the market's pricing in, I think, the forward outlook on GDP. Okay, so GDP continues to accelerate. The market looks for that exposure. It expresses it by seeking growth-oriented assets. You can see that whether you look at the style factors in the S&P 500, we could show that to you now. Whether you look at the NASDAQ up, the NDX actually I think is up 21.5%. But again, when something has an implied volatility, if you look at this now, so if you take tech out, you can't really, because the top 25% sales growers include tech. But if you look at top sales and earnings growers, the far right column, the last 4 rows, you can see just a pulverization of growth versus slow growth. If you're in the top quartile versus the bottom quartile, you're crushing it. You're just absolutely mercy crushing it. And that's the point. That growth is being priced into the market, and I'm just one of the lowly mortals that can tell you that there's no magic multiple that stops that. Valuation does not end a bull market when growth is accelerating. Now, when growth stops accelerating, that'll be the first thing. That's when you go from here to here. When growth goes, so let's just draw another sine curve. You got a sine curve, you're going, we got to stay on this one. We're on this part of the sine curve. This is very green, okay? Can you see that? Does that look green to you, Genron? This is called slowing in rate of change terms. So we're talking the delta, okay? The delta. That's called slowing. This is called accelerating. Okay? Comprende, muchacho? When this, which we're at 2.58, we came from 1.2. This was 1.2 right at the bottom. 1.2%, that was Q2 of 16. If you got all this right, you're a Hedgeye subscriber. It's fair to say. When I don't get it right, I'll let you know. Slowing to the low, acceleration to 2.58% in Q3 is where we have it, which imputes to a 4.23% GDP number in Q3 in terms of how the old wall will read it. Okay? What I'm looking for, I don't actually want it, nor do I not want it. I don't care, because I want the data as I receive it. The minute that I get data that is trending goes like this, because the rate of change move there is the first non-acceleration. Because that's the first leading indicator for what? The next slowdown. There's no person in this business who wants to get that move more right than I do. There's no person in this business that wants to continue to get this right as we've had it.